Doc here from North America. Good morning, good afternoon, and good evening. It is a few hours earlier. We're 3 hours earlier. Thought make it a little bit easier once in a while. We're going to try to do this once a week where we do things 3 hours earlier. We announce it. Makes it easier for some that have been trying to tune in at 1 in the morning or 5 in the morning. 5 in the morning probably it hurts, but without a doubt, those that tune in at midnight or 1 o'clock and have had it for the day already, and the new day is starting, they're just like, it's really tough to hear Doc. So we thought, today we'll start at 3 hours earlier, and here we are. Now we've seen it. We talked about it all week long. Who's afraid of Jackson Hole? Well, obviously, the Europeans are the ones that started this selling. In the United States, we priced in all the increases to come. There was no surprise. Fed chairman had an 8-minute speech. It was just the way it was supposed to be. The market started to lift from it, and then selling started to occur. And at the same time, we started to watch the ECB from Europe all of a sudden start pricing in a three-quarter price increase. Three-quarter price increase in Europe is enormous. Remember, they've been minus compared to us. Excuse me. And now the action in Europe is saying that we're going to start seeing 0.75% increases in Europe. In other words, they're going to start fighting. Now, there was talk that they would do something in September, but a lot of people didn't believe it. And now, out of nowhere, they're pricing it in to the overnight rates. They like the way we price things, 3 months out, the contangos as we call it, and 6 months out or 5 months out, where the rates are going to be. And now they're starting to, out of nowhere, price in three-quarter increases in Europe. So that hit the market, and all of a sudden, that stability to the second largest economy in the world, the European Union, hit the prices on equities. And from there, what we saw was slow, steady selling. And by the end of the day, the Dow Jones Industrial Average actually was down 1,100 points. And that pressure has stayed on. And let's see, where are we at this morning now? Here in the United States, Monday morning. Let's go over to that. There it is right there. As you can see, the S&P 500 right there is down 38 points. So you can see that's about, let's see, where is S&Ps? I'll tell you in a second. S&Ps are down 272 points. So they've added more pressure to it. Now, at the same time, we're seeing also QT, and that is quantitative tightening, balance sheet reduction in Europe. We're seeing the signals from that at the same time. And we're seeing it in the United States. They keep on saying it, but in Europe now, when they're doing it, sets up a whole different complexion. So, who was afraid of Jackson Hole? Obviously, in the end result, the Europeans and investors in America who invest in Europe. And the ECB is pricing in, at the same time, with these price increases, you have some elections coming in literally right on top of it in Italy, where already Italy is talking about what do they call it? Exit. In other words, they're talking about bouncing out the way England bounced out of the European Union. So I guess you could say the Western nations are having issues in Europe, whereas the Eastern blocs are doing very well. As we see Poland, second largest industrial nation on the continent now, they've moved away from socialism, and Italy, France, and Germany are moving towards it. That destroys growth. Socialism doesn't bring growth. And it's one thing to spend money, but if you don't generate enough money to pay for the money that you spend, then you have problems. And obviously that is what the whole issue is about. So the matter of fact, what is that? There, look, you can see. Let me just see if I can move this over to the screen there. And see, there it goes right there. There's the 10-year Italian bond. And it is going from the middle of August from around 3% to up to 3.7% right now, just over the last 9-10 days. They tried to take it down here, you can see, right there. Do a mouse right there. Where's the mouse at? There it is. You see that move right there? You can see they tried to take it down there, but it did not do that well, as I guess I can say. Oh, let's check the chat line we've been talking with. We haven't take a look on the chat line. Here we come. We're heading for the chat line now. But I just wanted to get this across in my opening of why the market's sold down, because I know we saw all the activity priced in correctly here in the States. You know, they've been expecting 0.75% increases in September, and they're looking for them again a couple days before the election in November, and they're looking for them again in I guess it would be late December, and then from there, you know, we'll see how things go. The election's going to tell us a lot here in the States. That is going to be the question now is, do we get a supermajority or do we just get a strong majority? That's what it comes down to. And does the Senate go to like 56 for the Republicans, or does it go to like 52 or 53? And that is exactly what we're really waiting for here in the States. So that all this selling that we're seeing is basically the oh, there we go. There's Janos. One can hear the 5 a.m. your voice. Oh, you mean I was swimming again in the. Good morning, Jordan. How you doing? Let me just make sure I can hear me. I see everything moving. No, I was swimming in the I was jumping off of a 50. Was it 45 miles an hour in the United States is what, like 80 kilometers an hour speedboat jump. It was so warm and beautiful and sunny, and I was swimming out in the middle of the Chesapeake, and so just enjoying myself. When I do, I get that little what do you call that? Get a little sniffles from it. Italy, yeah. If they leave, their debt gets massive and increased in rates, that would shoot themselves not in the foot but in the head. More than likely. I think that what it really comes down to is, what do you have in your opinion on this, Janos? And that is that Draghi really hurt the Italian banking system, the indigenous Italian banking system. Do you have any anything to say about that in particular? But that's what I've heard that really disturbed a lot of people in Italy and in Europe in particular, is that the Italian banking system on a, I guess you'd call it on Italy itself was devastated from what he did to it. No, this is when he was ECB chair. He wiped out the banking system in Italy when he was ECB chair. Now, I don't think he really got much done as prime minister, because I think it was like a split government to begin with. So, but I understand that there was a lot of anger with Draghi. I sense that he is not for a short-term fix and then intends to be gone. Yeah, well, that's pretty much it. Exactly. I heard that. I heard this months beforehand that he had, not a few months here before he left as ECB president, that he had hurt the Italian banking system. What they call it, irreparable damage. In other words, damage that could not be repaired. I guess they closed the largest bank in Italy at the time was like the fourth largest bank on the continent, and and I think that he didn't, as the ECB chairman, he did not bail out the fifth and sixth largest, or the second and third largest Italian banks, and they collapsed during the quantitative easing period. In general, the PIGS countries have very high social security that is paid with debt that a populist government borrows to pay for their promises. Yeah. And so Draghi, I guess, on some level, thought he was protecting Italy and shutting down the major banks in Italy. So I guess a lot of the borrowing now comes from more of the European Union. So that's the only story I know that's true. You know, I know that for a fact that those banks are gone; they don't exist anymore. So I guess in the end result is that another sneeze is coming. Excuse me. Yeah, that was on Saturday. I was jumping in and out of boats and goofing off, and waterboarding and so forth. Yeah, the pigs are a real problem, aren't they? They're like the canary in the coal mine on some level, isn't it? The pigs, for those that don't know what that means, that's Portugal, Italy, Greece, and Spain. That what they were calling the southern states in Europe. But we're seeing most of this selling coming from Europe over here in the States. And it wouldn't surprise me if, if we saw... What's up with this? Where is... Let's try that. The Dow Jones Industrial Average is not popping up. I'm not sure why. Oh, maybe I have to go this way. Oh, there it is. Now it's loading. Okay. So, that's part of the problem right there, as far as I can tell. Now let's get over to the... Now, this is... and the story about the problem of the 0.75% increases for ECB over the next couple of months is basically what it really comes down to is the ECB is forcing, I guess, inflation-fighting tools finally. And they talked about it. I remember, what's her name? Christine Lagarde said that they were going to do something in September. Looks like it will continue heading down as ECB lags and the Fed continues to tighten. Yeah. I know what I was going to say is that as it makes some sense now why we're seeing what we're seeing in the this. Let me go to the euro this morning. There's the euro, and you can see why it's been hovering. Every time they try to bounce it. You can see that pressure. And when we looked at those rates, that was the bounce, I guess. Where's that map at again of the ECB? Let me find that map again. But yeah, Christine Lagarde made it pretty clear that they were going to do that. Oh, wrong one. Isn't it right there? Let me just double check my sound. Everybody's hearing me good. Okay. Yeah, it looks like I think ECB lags. Yeah, there we go. Let me just double check the sound again. There it is. Okay, good. Yeah, so when we bring over this chart again, that little, I guess you could, let me just move this over a little bit like that, kind of connotes this action right here. And that peak, I guess, is the bottom here, and then turn up. This is like a this is like an hourly chart, so it kind of stretches out a little bit, but it kind of represents more of what was going on in Europe. So that pressure is going to stay on. As you say, I agree with you. It'll probably stay on for a while, and I guess it's giving opportunity to buy. I guess it's like the classic. How many times have we seen Europe over our lives? At least I have. I've seen Europe, just shoot themselves in the foot, as we would say. We've seen them do things that don't benefit themselves in the end. And so that is probably, it kind of makes sense, is that we're probably going to see the Europeans sell some of their positions, liquidate, do that adjustment, especially, the funds in particular. Remember, when you incorporate in Europe, it's the same thing as in the United States when you're doing a fund. Only China can you get away with this stuff because, you can't really sue anybody in China. But if you're a fund in England or you're a fund in Europe, you're going to get sued if you don't follow your incorporation manifesto. So when the ECB all of a sudden starts to increase rates, they must close positions. Whereas, we see the Chinese always playing games because there's no legal system to sue. So, in many ways, you gotta wonder that, I don't really look that close at the investing in China. And, I hear it and I hear them talk about it and they build plants there, but I don't hear how the investing is going. In other words, when BlackRock says that they're investing in them, they're only investing, I think, like, 25 or $30 billion. They're a $9 trillion company or an $8 trillion company. And J.P. Morgan and all these other major institutions, when they invest, and Goldman Sachs invests in China, whereas in Europe, when they invest, they can invest larger sums. They're heavily invested. But when you're invested in China, the numbers are not that big, really. At least that I have not really seen any massive investing. I've seen massive investing in buildings, in manufacturing. They're probably investing just enough for the population, hoping, future economic numbers and so forth. But what I'm trying to say is there may be not as much investment going on in China as we think there is. Last announcement by the ECB was like, we hike rates, but we'll keep buying assets if warranted. Yeah, I remember Lagarde saying that. I remember making a joke out of that because I think I referred to it as taking from Peter to pay Paul. I think that's one of the old sayings here in the United States. It's Saint Peter and Saint Paul. So in other words, you're taking it from one side of the church and giving it to the other side of the church. Or you're taking it from your left pocket and putting it in your right pocket. So yeah, I remember making a joke when Christine Lagarde said that. I think I mentioned something about, isn't there a warrant out for her arrest still in France or something like that? But anyway, or I think maybe they pardoned her finally. But yeah, that's I don't see it helping anything. And I don't see the investing helping anybody. And I guess what we're seeing now is some liquidations. We're obviously seeing some liquidations in the European stocks. There it is right there. Okay. And so you can see, the Dow Jones Industrial Average right there. Oh, where's it at? Let's move it over. There we go. The Dow Jones Industrial Average, let's fix that. Put it a little bit longer. Let's show you the last 2 days. There it is. So you can see here, and we can track that. You see the Dow Jones. Okay, so I got to put 3 days in. There we are. There we go. Now that shows you from and contracted up. Shows you the slam from the peak up in there, up in here, where the Dow Jones was trading at the 33,400 area, and by the end of Friday, it was trading at the 32,200 area. So it was down almost 1,200 points. It was like 1,100 and something. And you can see here it's kind of basing, I guess you could say. And we're through the European hours. You can see here's the European hour start. They tried to sell it down a little bit more. Seems to have stalled. That was Asian hours right there. So maybe I'll try to take it one more time down when the Americans are awake. That's pretty much where we're at the moment. And so, yeah, I would think this is setting up for a buying opportunity. Now let's just, as we looked at the euro, let's put it up on J4X too and move away from the dollar is being bought here. So we're seeing the strength in the dollar again, as you see on J4X. And let's take a look at it on the euro too. Same situation, I'm sure, is that the euro is rolling over. Now you can see all the internal math is trying to turn up here, but we're not. We had a green hinky here, but now it's dropping down again. But we're in that weekly sell. As you can see right here, we've been in a weekly sell. This is the second week. Now we're in the third week of a weekly sell, and you can see that pressure on the product. So, I'm just thinking that this sell-off is probably the one you want to buy. And as you can see, are we setting up some new lows? Let's take a look at the Dow Jones Industrial Average on J4X. Right there. And we'll make it large for a second. See that in June they're not even even with all that selling, we're not going after the June lows. See that right there? We're still not going after the June lows. So, I think Americans are stepping up and buying while the Europeans are selling. I think that's what's happening. Now, if they dropped another 1,000, well, they'd have to go all the way down to like 2,900 and change. They'd have to drop a couple more thousand. I don't know if there's enough room for that for the anticipation of what we're seeing here in the States. I think that they're buying. Remember, I told you one of the better analysts I've seen. He was a clerk for an institution, and now he has his own fund. And I think his name is Michael Lee. I think that's what it is. And he's been very accurate over the last decade. Very well. I mean, the last decade he's been on top of it very well. Pick the tops with it's almost like as if he's following our math. He's very good at understanding the markets, and I don't even know who he clerked for. I mean, he may have clerked for somebody that I used to feed data to. It's hard to say, but in the end result is that he said that buy before and buy after. That's what he said. And I thought, wow. And I remember mentioning it in the webinar last week about, who's afraid of Jackson Hole. And I remember mentioning him. And I think his name is Michael Lee. And he moved his operation down to Florida. I mean, he's so organized that, he moved to Florida. He knows better. And so, and the end result is, I would say, we're seeing the selling come from outside the United States, and I think the Americans are going to take advantage of that. That's what I really think we're seeing. And so, you can see that the euro this morning is not really getting beat up any more than it's been beat up for like the last couple of weeks. Let's put you can see the euro again right there. You can see it. It's now, there's going to be pressure on it. But at least now, if they're going to put a three quarters price increase, it should stall out the buying in the dollar. The only thing that's probably pushing the dollar buying is the elections, as far as I can tell. All right, now we're only a few days away from September, and the same, everything is moving like clockwork. The crazy polls are coming out from the mainstream media that don't match the polls by the experts. And obviously, since they have all the ability to just keep on repeating the same stupid stuff over again, all of a sudden people are starting to doubt the election. It was the same way in 94, 95. It's like that all the time. Every 2 years we get the same goofiness, and then they'll adjust it going into the last week or two. Now remember, institutions pay people like myself to do real data, and you don't see it because they pay for it. And as far as I can tell, markets are going, the election's going to turn very favorable for the opposition of the government at this point. That's the way I see it. I don't see any math telling me anything different. All right, from there, let's jump over to the cable, see what the cable's looking like. Now the cable's even seeing more pressure on it. What is that? Let me just scrunch that up. But we're making new lows again in the cable also, as you can see right there. And again, that's also in a weekly sell starting off on a third week. What, the representative government? You know what it really comes down to is that not only are we nations, it's the First Amendment that makes things crazy. You know, the First Amendment, anybody can say anything. The media is just goofy. It's going to change. What's going to happen in the end is that the FCC, the Federal Communications Commission, will be disbanded. And what they're doing is what happened was the left slowly bought, even they bought Fox News. So Fox News is owned by Disney, which was one of the biggest the chairman of Disney is one of the biggest Democrats in the United States financially. The Fed messes up, blame Democrats and elect Republicans. Oh yeah, I know that. I agree. Corona starts, blame Republicans and elect Democrats. Yeah. Well, actually, Democrats have been losing for a couple of years now. The last election with Trump, we almost took the House. It was an enormous win for the Republicans. We were very close to taking the House. We won an enormous amount of seats. And around the country, the states that helped sway the election after midnight out of nowhere lost a lot of Democrat seats to the point where their governors and so forth lost power. The representative government. What we try to do is the system is built to create what we call a timeout. And so what happens is that you go through moments, instead of people firing rockets, like the center of Europe right now has bombing going on. In the United States, we don't have bombing. We have just our same old city stuff. What was it? There are more stabbing deaths in Europe than there are shooting deaths in the United States. Isn't that amazing? You never hear the media talk about stuff like that. So, in other words, Europe has banned a lot of private weapons. So instead, there is actually more deaths in Europe and in England from stabbings than there are from shootings in America. Oh yeah, I know. That's because the politicians have enormous influence on the Fed chair, because they nominate governors and it has to be approved by the Senate. That's exactly it. That's matter of fact, that's what the news sources that I trust in the States, that's all they talk about, is the fact that Mr. Biden is doing everything the opposite of Mr. Trump. And what it's doing is we're in the second quarter of recession now, and the media keeps on questioning what a recession is now. And at the same time, the third quarter is now looking like it's going to be minus. So, yeah, I mean, I think I've always said, haven't I? I always said it every time I worked or lived outside the United States. America is a land of big children. That's what we are. We're big children. We're just children. And children make strange mistakes and do crazy things, but nothing can stop them because they're the big kids. And the little kids can't stop them. The rest of the world is full of little kids. And, America is like a giant playpen. So in other words, we're 3-year-olds, and the rest of the world are 1.5 and 2-year-olds. That's pretty much the way I look at it, and that's how I see the whole world. I see the world being a bunch of 1.5 and 2-year-olds, babies, and the United States is like 3.5 and 4-year-olds. And so everything that's done, you have to shake your head at. It's like, oh my God, the 4-year-olds are in charge. But they're in charge of the 2-year-olds. So there's no help. I mean, look at Europe. They've shut down nuclear power plants. They've stopped any drilling for oil. The biggest word Two words being Googled in Europe right now is firewood. I understand in Poland, what was it, yesterday? The lines to buy coal were enormous, I was told, over the last couple of weeks. And so America is the engine for the economy of the world. That's why China is so angry all the time. Is China hates the idea that America is the engine. They want to be the engine, but they don't even have a currency that can be used. So I mean, it makes it really hard. So I mean, socialism and communism does not generate GDP. It doesn't grow things. It only keeps things status quo. Last Sunday of summer, people do chores. Buying coal is a choice. Is a chore. Okay. Yeah, I understand the lines were historic. That's what I heard. Yeah, I heard the lines were enormous. And so, I mean, you know, the whole solar system is going through an environmental shift. And at the same time here in the United States, they act like as if we're in control of it. You know, I mean, we've got, out of the last 5 years, we've seen Pluto lose a third of its atmosphere. Okay? We've seen Neptune and Uranus, winds shifting, and electromagnetic storms that are enormous. We've seen we've seen Jupiter and Saturn go into what we call ice ages. We've seen Mars and we have tons of equipment on Mars, so we know what's going on there. They have earthquakes now every day. And the temperature of Mars is rising out of nowhere. Now, no more than, I'll explain a simple thing. For Mars, since we have so many satellites and we have so much equipment monitoring Mars, they predicted that there would never be an earthquake on Mars for years because it doesn't have the plate tectonics that the Earth has. Well, guess what? They're having earthquakes every day now on Mars. 4.5, 5 pointers everywhere. Okay, the place is shaking. The whole solar system is going through it. We on Earth, the North Pole has moved into Siberia. It's 1,200 miles away from where it was no more than 10 years ago. The South Pole has moved to the edge of Antarctica and is heading into the Indian Ocean. Africa is 12 degrees below normal temperature-wise this summer. Europe, Western Europe, is above 6 degrees normal than this summer. The whole planet is shifting dramatically. The whole solar system is shifting dramatically, and a lot of people on Earth, or at least let's put it this way, people in charge of things, are trying to shut down our energy sector at the same time. Energy, sure, we need energy. So energy should go up. Most definitely. It has no influence on our planet. Or it's the other way around. Earth is destroying the solar system. Take your choice. So we're trying to save... are we that powerful that we can influence Pluto's atmosphere and create ice ages on Jupiter and Saturn? I doubt it. Or create earthquakes on Mars? I doubt it. I don't think we have that power. I don't see it. I just don't see it. So, but there's some that believe that. Or maybe they're pretending and they're doing it for other reasons. But in the end result is that, energy is necessary. Well, let's put it this way. What they're doing now is, they're raising interest rates to slow growth. How's that a positive, the slow growth? And at the same time, the policies are destroying things. It's Monday after a chill weekend. The top level thinking my brain can do now is chicken or pork for dinner. Go for the pork, especially if it's barbecue. I myself am going to start working on making a good pulled pork over the next couple days. Hunt down a nice piece of pork. All right, just a kosher pork, from the Pacific. There are kosher pigs down there. All right. Let's see. Where do we go from here? So from there, Let's take a look at, you see the British pound. Let's see what the British pound looks like on J4X. We're seeing that pressure on all this stuff at this point. So, matter of fact, I think I saw oil up this morning. We'll do that. We'll go check out, where do we go from here? We go to Swiss. Let's see what the Swiss is doing. And there is Swiss. You see there it's turned the corner again on J4X. Let's see what they're doing here on Chicago Quant. Right there. It's still in a buy. And we're in a weekly buy from last week. So the pressure on the Swiss is probably very indicative of the increases that are coming. Just because that's an interest rate factor. Let's see, Yano says, oil rises on prospect of OPEC and supply cut. Yeah, well, OPEC came out on Thursday and said that if our bozo the clown Biden signs a peace treaty with Iran so that they can export fuel, OPEC and Saudi Arabia in particular said they're going to cut back on production. So, in other words, they're not going to let the prices drop. So, we mentioned that in the webinar on Thursday. So that's going to be putting the pressure on energy to not drop down. And let me just do this. Let's go to Canadian instead of Turkish lira. There's the CAD. And as you can see right there, it's rising. So normally that means interest rate, normally that means crude oil is going down. But I saw it up the last I looked at it. Right there. There's. Okay, yeah, they've knocked it back down again. Is that right there? No. It's the wrong feed. There it is. So it's doing Sunday night and Monday. There we go. So there we go. So yeah, it's pretty much unchanged. It did run up to 94.40. And as you can see right there, it's trading about $1 lower. And just a tad minus at the moment, I guess you could say. Let's save that down. Let's move that over like that. So crude is doing that. And then let's see what the back months are doing. There is November crude. Or there's December crude right there. Let's do that. There's December crude. And December crude is doing the same thing. It's trying to lift up. But we're in the daily sell. You can see the back months are in that sell too. And there's deck crude. And then take a look at November crude. You know, the pressure is on these things. Let's see, that gets moved out. Oh, yeah, that's again, that's trying to show us. No, that's Friday, yeah. Went into the sell on Friday. There it is. So you can see that. But the weekly's still holding up. I have a hard time believing. I like I said, for a while I've been saying it here. Let's move that out of the way. I really believe that crude is just going to go sideways in here now. So in other words, I call it the 90 range to 115. But what it really comes down to is it will probably bounce around. And this is the October crude. So you can see the three American crudes are all minus. And there's the front month. That's the front month right there. That's October crude. Let me just double check that. Yeah. So October crude there. But the November crude. Did we do the November crude? I don't think we did. There's the November crude. So all 3 months are feeling that pressure. Oh, okay. November's. Oh no, that's last night. Let's fix that. It's collecting the Sunday night trading. There we are. It has to be combined together. There it is. So you can see here the pressure is still on all the crudes. It's sideways. And when I call it the 90 to 115 range, this is pretty much, they're playing with the 80s, the high 80s, and then they'll find a way to drive it back up, especially with OPEC making it very clear that they're not willing to allow oil drop under the 90s, which makes sense, Oil rises, prospect of supply. Let's see, that was the headline this morning. Oh, was it? Yeah, we were seeing that on Thursday. Yeah, we were getting that on the news sources that I pay attention to. I'm not sure what they talk about on the mainstream. I haven't paid attention to real mainstream news in a long time. Like I told you, even Fox News, not Fox Business. Fox Business is still owned by Murdoch, and like Sky, and all like that. But Fox News in the United States is owned by Disney now, so it's same as ABC and so forth, and CBS. It's owned by them, so they control the news. So they use that as a propaganda machine. Goebbels would be very proud. The former voice of Germany back in the 1930s. Goebbels would be very proud of what the Democrats have done. So let's see. From there, let's see where we go. Oh, that was the oil, right? So now let's take a look at the euro. Was it the dollar? Let's go to the currencies. The dollar lira. There's the dollar lira right there. See if we're any higher. Still hanging out in the 18s. Notice that the Turkish government hasn't been able to stop it now. Seems like it's on a track that just is not going to shift anything. And at the same time, let's take a look at over here the euro Turkish lira, which is the more trustworthy pairs trade. You see it right there. A little pressure on it this morning. Let's check it out on Chicago Quant. Because the dollar Turkish lira has been in a buy for like 28 weeks now. And then the euro Turkish lira right there, still in a buy for the last 7th week now. In a buy. A little pressure on it still. It's unchanged. No, look at it's unchanged today. So you can see it popped up on Friday, and it dropped down today a little bit, but now it's unchanged. So the pressure is on there for the growth. Yeah, it's going to be very interesting these next September and October. We still have 2+ months to the election. It's going to be very interesting these next 9 weeks. 9 weeks? Yeah, 9 weeks. It's like a pregnancy. 9 months. It's like 9-week pregnancy. Because that's all they do is talk about the politics every day in this country. It drives me crazy. It's like, normally us professional politicians, we love the idea that basically after the primaries, we don't usually hear any more news. We don't want to know anything until September, October, and then we have to really push hard again, But this year, it's been nuts every day since March. It's all we do is hear politics. Every day it goes on and on and on. It's like, geez, give us a break. Now, you can see here, when we looked at the stock markets, just a mild drop down, compared to Friday's slam. And that's the Tech 100. So you can see the pressure on the Tech 100. And then saving some data as I do that. Then you can see here September. This is the S&P 500. Pretty much chill. It's down a little bit. Nothing major. You can see both of them are playing with their weeklies. It's right on the edge. Both are playing with weekly sells. They're through them. They are through them. So they're seeing the pressure there. And then, as we saw on the Dow Jones Industrial Average, same situation. The pressure is there, and it's sliding into the sell side this morning on the weekly. We'll see how let's see how they play it out by the end of the week. Remember, as much as I always make the poor joke about the idea in Europe, it's buy low and sell lower. In America, it's buy low and sell higher. So we'll see what kind of pressure we see on the U.S. market. It wouldn't surprise me if we close the week up. Wouldn't surprise me at all. We'll see how much damage they do today going into DeMarc, and then what strength they come in on Wednesday, and then the attempt to recalculate again Thursday and see how the buyers come in Thursday afternoon, and then the close of Friday. But as far as I'm concerned, that is pretty much where we're at. Now, what's really surprising, since we're drifting around in here, you can see gold. I mean, they're putting that pressure on the gold the same way, which is, kind of surprising. You can see it there. They're playing with the weekly sell right there in the gold, and they're doing the same thing with the silver, which is even more surprising. I thought these metals were going to turn, and I still think they're going to turn going into October towards the end of the election cycle. We've been talking about that for months, and you can see here silver, same situation, playing with its weekly sell. I think the only reason, obviously they're going down is they're not paying attention to inflation. They're paying attention to interest rates. In other words, the cost to carry for the metals market gets more expensive when you have interest rates rising. So that is a normal selling situation. Now, let's fix copper. You can see there, copper to me is always a window look to the Chinese economy. I always look at it that way. So you can see here, we are flirting with a weekly and a weekly. But remember, we're off the $5 area, and we're trading in the $3.50 area, which again, the economy in China is really getting crushed right now. They're doing a $1 trillion stimulus, which equates to, I don't know, what's $1 trillion in dollars? I guess it's supposedly there's 7 yuan to the dollar basically. So 7 to 1. So it's like a 250. It's like a $300 billion stimulus. I mean, we just got done doing a $4 trillion stimulus. If China was such a powerful nation economically, the way they keep on telling us they are, they would be doing, say, I guess something roughly around 12 trillion yuan, right? Wouldn't that be logical? Not a 1 trillion yuan? 1 trillion is only $300 billion. I mean, the Federal Reserve sneezes at $300 billion. They can piss away $300 billion without even paying attention to it. Wasn't it Mrs. Yellen at one time found 2 trillion in her sofa or some crazy thing? She was looking around for something, and she found an extra $1.5 trillion or $1 trillion plus. Remember that? We talked about it in the webinars for a while. She found $1.5 trillion that wasn't accounted for in the Federal Reserve. And I made the joke that she was cleaning the sofa in her office, and she must have found the $1.5 trillion that fell out of Bernanke's pocket. So, I mean, doing $1 trillion yuan as a stimulus is nothing. That's pennies. Hey, 47, how you doing? Yeah, let's look at the Nikkei. What are they doing there? We haven't even checked that out. Let's see what the Nikkei is doing. We can see the dollar is very firm today. And there is September Nikkei right there. Down from Friday's sell-off. Went into a sell there. So we were in a sell-off where? From here. Did the same bounce as everybody else on the planet on Thursday. Went into the buy for a day. And like everything else got whacked really hard. And now at the close of Friday, it's back in the sell again. And you can see the weekly is not as damaged as you can see, like the S&Ps right here. Let me show you the S&Ps right there. You can see the S&Ps are just flirting with the weekly sell, and so is the Tech 100 right there, flirting with the weekly sell. And I don't think it's going to last. And you can see the Dow Jones Industrial Average is flirting with the weekly sell. I don't think the selling is going to last. That's my opinion. Look, because I say that because I don't know. I've only seen buying going on, and we're seeing the selling is Europe. So the funds in Europe are adjusting their portfolios for the 0.75% increase now in September by the ECB, and now they're projecting 0.75 increases in November also, just the same way as the Federal Reserve is doing. So when Jackson Hole, when Mr. Bernanke, he only spoke, Mr. Powell, when Mr. Powell spoke at Jackson Hole, for 8 minutes. That's all he spoke for. He didn't surprise us whatsoever. After he got done speaking, the ECB started to put pressure on the market. And I think all this selling is coming from the ECB at this point. There are funds in Europe and so forth that are incorporated, have to liquidate. So let's go back to the Nikkei for you again, right there. And there's the Nikkei. So I think that's where the real pressure is coming, is from the Europeans. I think they're doing the selling. Let's see where the yen is at. There's the yen right there. You see the yen is rising. So, I think it's just the funds liquidating. I think that's what it really comes down to. Did we look at Canadian? Yeah, we did. We looked at Canadian. So there's the Canadian. I think that's all it is pressure. The Canadian's acting very well. It's coming off of the lows, as you can see right there. Or no, that's the highs. That's right. That's the high end of the range. So Canadian has gone to the middle of the range, over the last year, and now it's going back up again. It goes to the highs of the range. Inflation has put some pressure on it. The war in Central Europe, I guess, has put some pressure on it. But overall, it's just kind of calm. You mean European funds are anticipating a recession in Europe? Exactly. Well, more than that is their incorporation manifestos say that they have to liquidate certain assets or a percentage of certain assets. So they must, when you incorporate the funds in the Western world, they're controlled by the law, whereas if you're a fund incorporated in China, notice when Chinese funds get in trouble, they bail out the Chinese funds, but they don't bail out the foreign investors, because the foreign investors have nowhere to sue. They can't take them to court in China. So that's why I'm not very interested in investing in China, and I'm against anybody who invests in China, not because I dislike China, but you can't recoup equity. You can't sue. So you notice, like when Evergreen, the largest real estate fund, fell apart in China, the Chinese government gave money to the domestic investors, but they did not take care of the foreign investors. The same thing happened with the banking system. When the banking system collapsed in China, they took care of the domestic investors, but they don't take care of the foreign investors because they can't sue. And the only reason they take care of the locals is because they don't invest that much money to begin with. So it's easy to bail somebody out when you give them yuan, but if you had to pay the foreign investors dollars, that meant they would have to. You don't think that they keep that $1 trillion in American Federal Reserve bonds for fun? They do it because they're terrified that if they don't have that, they have nothing. And notice they still keep $1 trillion all around. If they really hated America, they would sell the bonds. The Russians would sell their bonds. Russians have sold some domestic American bonds, but overall, Russia still is invested in American bonds. So, they keep on making these announcements like our sovereign fund is uninvested now in Russia. They say that all the time. So, yeah, but their central bank is invested. So, it's just a game. It's like the Democrat media here in the United States. It's just fake news. That's all it is. You follow the money instead, and when you really see where the money is invested, you'll know. So what happens is that funds in Europe, they have to do what their incorporation says, or they go out of business and get sued. Whereas a Chinese fund replenishes the domestic because they can give them yuans, but no one wants yuans outside the United States, outside the China. They don't want yuans. So, it's kind of a, as far as I'm concerned, the second largest economy in the world is the European Union. That's a $21 trillion economy. For the Chinese to claim that they're a 14 or 13 or $15 trillion economy is fake because their currency is fake. It doesn't have any value outside of China. So they're not anticipating, they're compensating. They have to follow their incorporation manifesto. They don't have a choice, or they'll get sued and put out of business. Whereas you can't sue a Chinese fund. You can sue a Japanese fund. You can sue a European fund. You can sue, an American fund. You can sue a British fund, but you can't sue a Chinese fund. So that's why you're seeing liquidations. They have to follow the rules. And let's see, where do we go from here? Let's take a look at the South African rand. I wonder what it's, I'm curious what the South African rand is doing, since we're seeing gold sell down. And there it is right there. It's moving up in price. China is probably facing stagnation. It is already there. 20 years? Want to increase that? Stagnation is what? From the late 80s now, right? 92. So I would say that there's over 3 decades of stagnation in Japan at this point. And we were talking about that last week with you. Remember the Nikkei? We go back to 2003, I think it is. And the Nikkei all-time high is 39,000. And now it's what? The Nikkei is trading at, let's go back to the Nikkei. The Nikkei is trading at almost 28,000. So it's still 25% off its all-time highs. The Chinese market is what? 50% off its all-time highs? 60%, something like that. At one point it was almost 65% off its all-time highs. And its all-time highs is like what? 10 or 15 years ago or 8 years ago, something like that. I mean, they're going to be, yes, they're going to have problems for a long time. Long time. All their major funds have collapsed. And they bail out the domestics, but they can't bail out the foreign investors. That's why, and investing is dropping in China. American investing, companies are not investing in China as much as they used to. So, all right, traders, we're going to get out of here, and we will see you in the normal time tomorrow on Tuesday, instead of this early 3-hour thing. So we will see you all tomorrow, same time, same channel. So happy trails to you until we meet again. Happy trails to you, to all our trading friends at Dukascopy and the world. Arrivederci, traders.